certainties, but probabilistically speaking, as the business cycle accelerates, people go further out the risk curve because they have more money. You're earning more money, your mortgage has gone down, you have higher savings, you can recycle them into assets. It happens at corporate level too, as corporate earnings go up and the overvaluation that people are scared about of the stock market, well, that all becomes noise as well because earnings expand. And then those earnings get recycled into investments and the market goes higher. So altcoins should outperform in the next phase once we get out of this corrective phase.
For cryptocurrency investors, the last week has been quite the roller coaster. Massive liquidations, abrupt price changes, and market volatility have rocked the industry. In a matter of days, over $1 billion in leveraged positions were liquidated, altcoins were smashed, and Bitcoin experienced a sharp decline. Traders are understandably alarmed by this. Many are wondering, is the bull market coming to an end? Have we reached the pinnacle? As we've heard in past cycles, some are even saying the rally is over. However, the truth is as follows. This correction does not signify the end of the bull market. Macro investor Raoul Pal and other analysts believe that this is only a brief reversal in what is poised to grow into one of the most potent cryptocurrency bull markets in history. When you take a broader view, everything is still in position for a huge rally in the upcoming months. Pal talked about the most recent market volatility in a recent urgent update, implying that the worst is over. In the upcoming weeks, he thinks there will be a major rebound in Bitcoin and other cryptocurrencies. His analysis of global liquidity and how it affected the cryptocurrency market in past cycles serves as the foundation for his optimism. Raoul Pal highlights that the cryptocurrency market, especially for Bitcoin and other digital assets, is significantly influenced by global liquidity. Cryptocurrencies lack balance sheets and earnings, in contrast to traditional financial markets, and their value is mostly determined by the amount of excess liquidity in the financial system. Capital tends to move into riskier assets like Bitcoin, Ethereum, and altcoins when central banks print money, cut interest rates, or add liquidity to the markets. The price of cryptocurrencies increases when liquidity is abundant. Crypto struggles when the amount of liquidity decreases. Liquidity is plentiful at the moment, and Pal is absolutely certain that this will become more apparent in the coming weeks. Please remember to like, share, and subscribe to the channel as we share snippets from his emergency update. For additional updates, make sure to enable post notifications.
That drives all of this is the business cycle. See, the business cycle is driven by financial conditions, liquidity, all of those things, but this is how businesses do when financial conditions get easier. The ISM survey above 50 shows the economy is starting to grow. Now, economic growth has been strong, but that's been driven by the government sector. But again, Trump and Bessent have said they really want the private sector to take over. So what they're telling you is they want the ISM to go up. They want the private sector to start expanding, regular businesses. And regular businesses expanding also drive Bitcoin. So Bitcoin goes up as the ISM goes up. So this kind of rate of change of Bitcoin will give us much higher prices if the ISM gets up to its normal cycle peak of somewhere between 56 and 65. And that will give us the magnitude of the rise in Bitcoin. We don't yet have a full handle on how high the ISM will go this cycle, but if it goes above 60, I mean, those are high prices in Bitcoin. That's above 300,000, maybe even higher. Now, again, I don't use forecasts because you guys don't deserve them, because you use them against me and say, well, you predicted that. I'm not predicting. What we're trying to do is give you contextualization of how the market can evolve so you can play along from home. Rising ISM will be good for your bags. And rising ISM it may still be choppy because we're still coming through. We need rates to go lower. But as that happens, we will see this pick up. Forward-looking indicators of ISM, like ISM new orders, less inventories, leads by 3 months. It's going up very sharply. Again, expect it to be choppy, but it's telling us ISM should be going up. So that's good for Bitcoin in the future. 3 months' time, Bitcoin should be much higher. Okay, great. It's starting to get this now. The ISM also says, well, when that starts coming above 50, what happens is altcoins tend to outperform. Now, there's all this bullshit online. There's going to be no altcoin season. It's never going to happen. It's only a Bitcoin only season. It's all about the ETFs, blah, 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 blah. Simply, probably not true. Again, we deal in a world of probabilities and no certainties, but probabilistically speaking, as the business cycle accelerates, people go further out the risk curve because they have more money. You're earning more money, your mortgage has gone down, you have higher savings, you can recycle them into assets. It happens at corporate level too, as corporate earnings go up and the overvaluation that people are scared about of the stock market, well, that all becomes noise as well because earnings expand. And then those earnings get recycled into investments and the market goes higher. So altcoins should outperform in the next phase once we get out of this corrective phase. Okay, let's look at these corrective phases. If you guys have got this far and followed me, we've gone through 1, 2, 3, 4, 5, 6, 7 20% plus pullbacks. And you can't remember those. You might remember the last summer one because that was pretty miserable, but that's it. We deal with this. The volatility is a feature, not a bug. You need the volatility to drive these massive rips when they come. So that's where we are. We've seen this. We should be somewhere close to bottoming. Now, with those 7 pullbacks, we've still had 600% returns from the low. Again, you've forgotten about those because you're like, oh my God, it got to 110 and now it's at 80. It's like, it's all fucking noise, kids. Really, honestly. When we go back to 2017, it was more violent because Bitcoin was earlier in its adoption phase and we had 1, 2, 3, 4, 5 30% plus pullback, some of them at 40%. So this is more like Solana now, which is more volatile because it's earlier in the cycle. It's more like Ethereum. It's more like others. So this gives you the contextualization of what you're going to have to stomach to make the money. To unfuck your future, you're going to have to learn to deal with volatility. And if you've got any spare income and you can invest, you can buy some of these dips, but be careful later in the cycle. You don't want to overextend when you should be thinking about how do I take money off. But we're far too early for that yet. I talked about we could take lifestyle chips off sometime in the first quarter. Looks like it's pushed out to the second quarter. I'll keep you updated when that happens. But again, I'm very chill about this. When you zoom out, Bitcoin is just retesting where it broke out from. That's it, guys. It's hardly a big deal. When we look at the RSI of Bitcoin, it's like the second most oversold it's been in this entire cycle. These are opportunities. When it gets this oversold, yes, it can chop around a bit at those lows, might even make a new low, might chop, rally, new low, which will then diverge on the RSI. But it's telling you 1 month from now, prices will start climbing for sure. They'll be higher than here. And then 2 months, 3 months, 4 months, we should have much higher prices. So once we've got the corrections out of the way, you start to look forward to, okay, now I can get some real price action going again. So that's to come. When we look at Solana, everyone's like, oh my God, Solana, look at the price. It's just gone back into the range. So we had the kind of the meme mania peak. Then we've taken off the memes. Solana got the most oversold it's been, I think, pretty much since the FTX days. It's oversold versus Global M2. It should be fine going forwards. It's a very clean market. There will be plenty of on-chain activity in Solana as we go forwards. It's a broad, deep, rich ecosystem. So nothing to worry about. And I think many of the memes, or a few of the memes, will be Phoenix that rise from the ashes. We will see some great recoveries in some of that stuff too. But remember, that's only for 10% of our portfolio. The risky stuff is 10%. Solana is a core position for most people, and that's a good one.
Pal has found a strong relationship between changes in the price of Bitcoin and the global M2 money supply, a crucial indicator of global liquidity. According to his research, changes in the M2 money supply usually occur 10 weeks before corresponding changes in the price of Bitcoin. This suggests that Bitcoin's price typically rises 2 to 2.5 months after global liquidity increases and falls when liquidity contracts. Pal noted that, as of the November 2024, the global M2 money supply was driving Bitcoin into a parabolic phase in its market cycle. By January 2025, according to his models, Bitcoin might reach a local peak of more than $110,000 before a correction that would lower the price to less than $70,000. Pal is unfazed by the current market correction, because this prediction has come to pass nearly exactly as expected. The former Goldman Sachs executive explains in his most recent update why he thinks the correction is coming to an end and that prices should start to rise sharply in the coming days. Here are additional video snippets.
The core positions that I talk about for most people will vary depending on your case. But, I've always used Bitcoin, Solana, Ethereum, and I use Sui as a higher beta bet because I think that's going to do well this cycle. Again, you may choose different names. You may have XRP, you may have something else. That's fine. You do you, I'll do me. Let's just wish each other the best because that's all we want to do. We want everybody to do well out of this. If this is going to go from $3 trillion as a market cap to $100 trillion, we want everybody to make as much money as possible, and we can fuck it to the banking system and everybody else. We deserve this. This is our system. It's made for us, and it's ours to capture. Help each other out is the key thing, and not fight with each other. Fear and greed. Everyone's fearful as shit right now. It's collapsed down to 20, so super fearful. Again, these tend to be good inflection points to start thinking about absorbing. We're seeing exactly the same in equities, funnily enough. The NASDAQ, we've suddenly gone to this massive bearish sentiment. 80% of all surveys are bears. Those tend to lead to almost V-shaped recoveries. So now, can we have another, one or two sharp sell-offs around these levels? Possibly. But basically, it's telling us everyone's got way too bearish, worrying about global growth. They're not seeing that was something that happened last year, and the forward-looking indicators are doing the opposite. So, your Tesla stock, your Coinbase stock, all of these things that you own, they should be fine going forwards. We've just had a growth scare driven by the dollar and driven by financial conditions. That is past. The dollar is weakening and rates are coming lower. So when I put my DMARC indicators on top, which are my favored technical analysis indicators, we're at day 6 of a 9 count. So it tells us probably in the next 3 days, this will all be done. Is the low in already? I think it probably is. But could we kind of bounce, have another stab at the low, whatever? Day 9, that would be fine. For the NASDAQ, because it's not open on weekends, it looks like it's kind of Wednesday that it does it. Almost everything has the same set of indicators right now. So it's because it's all driven by the same thing. So it tells us that all of this stuff that's making everyone nervous should be over by the by the middle of next week. And then we can go to the healing phase. And then again, we can start rising. The healing phase, who knows? Could be 2 weeks, could be a month. But the back end of March, we should start to see prices accelerate. And then April, May, June, we should see some really significant price action as the second phase of the banana zone kicks in. These phases of the banana zone, I get so fed up with people online going, where's my banana? Your banana fell over. Your banana's not ripe. Your banana, blah, blah. The banana zone is a period of time that lasts a year. It is not an instant gratification. You guys need patience more than anything else and need to understand that. So we had the start of the banana zone. We are now in correction phase 1. That happens each and every time. Look at 2017. It's almost identical. Then, as we go into March, April, May, we start accelerating up again into the next phase of the banana zone. And then we'll have another correction. And you'll be going, oh my God, it's all over. It's all over. Am I going to die? Have we screwed this up? Where's your banana? Again, you'll have forgotten everything that went before it. And you'll be gripped with fear all over again. Then we have the final top into the end of the cycle. My view is that the business cycle is taking a long time below 50. It's starting to expand now. That has probably extended the cycle into 2026. Not a guarantee, not yet a prediction, but is what is in my head because of the structure of the business cycle. So we can probably keep going longer, and that will still give us much higher prices to come. So the game is all to play for. It is a game of don't fuck this up. It is a game of understanding the rules, understanding to have patience, and stepping back, zooming out, touching grass, touching sand, and let it play out.
Global liquidity continues to be the primary driver of Bitcoin and the larger cryptocurrency market, as demonstrated by Raoul Pal's analysis. According to his most recent observations, we are still in the early phases of an explosive bull run, and his global M2 model has correctly forecasted previous price movements. The underlying macroeconomic forces indicate that higher prices are imminent, even though short-term volatility may shake out weaker hands. Every significant bull cycle has seen pullbacks, but these corrections are merely chances for astute investors to accumulate before the next upswing. The data speaks for itself. Pal predicts that the upcoming weeks and months may witness notable recoveries and even new highs for both Bitcoin and altcoins, suggesting that the worst of the recent market volatility is over. Now is the time to zoom out and look at the wider picture if you've been feeling apprehensive about the market. Instead of panicking, smart money is preparing for the next move. Historical trends, institutional adoption, and growing global liquidity all suggest that the bull market will continue. Please remember to hit the like button to support the channel and help spread this important information if you thought this analysis was helpful. To ensure you don't miss any significant market updates, subscribe and enable post notifications. You can also leave a comment below with your predictions for Bitcoin's future direction. We appreciate your time and hope to see you in the next video.